Welcome to Real Estate Investing Secrets. We're all looking for freedom and the opportunity to live better, more fulfilling lives. But most of us were trained our entire lives to work for someone else and chase their dreams. How can we use real estate investing as a vehicle to achieve financial freedom? My life is dedicated to answering your real estate investing questions and helping you build an investing business that allows you to change your life and the world around you, and to enable you to turn your dreams of financial freedom into a reality. My name is Mike Hambright from FlipNerd.com, and your questions get answered here on the Real Estate Investing Secrets Show. What's up, freedom fighters? Hey, welcome back for another episode. This is actually episode number 469, and today I'm with my buddy Blake McCreight. Kind of a interesting touch point here. Blake and I are from the same general kind of hometown where we grew up at. Didn't know each other when we were growing up, but it's always funny when you live 1,000 miles away from home and you meet people that are kind of from your hometown, especially when it's like a smaller hometown. So that's cool. And another cool, interesting thing about Blake here before we kind of get into it is that he was on the show episode 173, which is like 300 episodes ago, and we figured out that was probably about 4 years ago. So, but excited to talk today really about exit strategies. So sometimes, if you look at social media, Facebook groups, for example, there's a ton of stuff on wholesaling because that's where a lot of real estate investors start. But the truth is most real estate investors that are established, have been doing this for a while, have different exit strategies they use. Sometimes you rehab, sometimes you wholesale, sometimes you might keep as rentals, other things. It depends on your goals. But if you have just one exit strategy, the truth is you probably are leaving money on the table sometimes. And so we're going to talk a little bit about exit strategies and what Blake does. So Blake, how's it going, buddy?
It's going great, Mike. Thanks for having me on the show.
Yeah, always good to see you. And so why don't you, before we kind of jump into this topic, why don't you tell people your background a little bit, how you got started, how you made your way out of the Quad Cities up in Illinois?
I made it out of the QC or East Mode.
By the way, for those of you that are listening, we might have a couple of little inside jokes, some old time humor. Old time humor? That sounds really old.
Oh, man.
Yeah. We're not old timers.
Not that old yet, Mike.
But anyway, go ahead, Blake.
Yeah, awesome. Thanks for having me on, Mike. I mean, like you said, it was 4 years ago, I think. So, but yeah, my background, I came out of corporate America. Much like most folks probably, go to school, get good grades, and have that corporate job. And, that was awesome. I'm very thankful for it. And, set me up to learn a lot of things, prepare me for owning our own business. But, in 2006, I decided to jump into real estate, which was probably not the best idea. So
that's when the lessons began, huh?
Yeah, right. That's when I learned everything what not to do in real estate. So it prepared me for the downturn. But yeah, really what happened was I started buying rental property in the Quad Cities. As you know, there's not huge appreciation, not huge depreciation back there. I mean, it was so everything cash flowed that I bought. But I was doing it all on bank money. Literally I borrowed from Wells Fargo. I borrowed like 80% to finance it. And they actually gave me an unsecured loan for the other 20%, which is hilarious. So, yeah. But it all cash flowed. And
they were learning too, like what not to do.
Yeah, exactly. So I had to help them hit their loan products. That's a bad joke, I suppose. But anyway, so that's like I got started like in 3 months. I bought a 7-unit building with a house. That was our first purchase, and then we bought a duplex the next month, duplex after that, and it was my dad was a contractor, so we partnered up on it, and we didn't know anything about property management, managing tenants, and that was luckily things cash flowed, and we were able to make some money that way, but. Shortly after that, the market crashed, and I really had no other idea how to do real estate other than if the bank would give me money, right? So, and then through that, we had tenants. We rented to college kids who left over Christmas break, and the heat went out and flooded the whole duplex with frozen pipes. So all these just putting bad tenants in. I mean, you name it, we learned a lesson. So that was kind of the end of our investing. It was about 2012. I had hooked up with a high school buddy of mine they'd been a machine shop worker and been really successful, and kind of sat down with him and figured out how to, this whole wholesaling So that in 2012 was kind of really when I got started. I just jumped in and, this is how you do it. You need to go get a cash buyers list and, call me back in a week. And if you do it, then we'll keep working on it. So built a buyers list and then figured out how to, start running bandit signs back in. We didn't have these cool tools that we do today, like software systems and cold calling.
Yeah, it's evolved a lot.
Yeah, it was like old school bandit signs, right? So, and you could buy off the MLS back then too. So,
right.
Yeah, so we just went out and, I started wholesaling was really how I really got my business started. And then, I started flipping houses, taking leads, and I'm like, okay, I can flip this one, and flipped one and kept wholesaling and flipped another one, and just kind of, one after another over the last really 6-7 years.
Yep. And now you operate, just for clarification, just primarily in the Chicago market, right?
Yeah. Now we've operated in a couple different markets,
right?
But, it's really, with I don't know, 9.5 million in the Chicagoland area. There's plenty of deals. There's really
plenty of opportunity there. Yeah.
Yeah. No reason to go outside our market. So.
Yep. So today we're going to kind of talk about different exit strategies. And like you said, when you first started off, and you're keeping rentals, right? And some of that is you still had your corporate job then, right?
Yeah, I did. Yeah, I still work my corporate job.
Knowing the market that you were buying in there, which is just an older, smaller market, like it's possible. When you're getting your first few loans as a rental, and you can get Fannie and Freddie type loans or bank, kind of traditional bank loans, I guess. Which you can only do that on a few deals, right? And then you're kind of out of that weapon. You could conceivably, in some markets like where you were at up in the Quad Cities and some southern markets, a few different markets, you could conceivably buy for almost full retail price and make those at least appear to work on paper, right? You're going to make assumptions like, well, 10% vacancy, 10% maintenance, and then when you get into them, and then you have something like pipes burst, you're like, okay, well, what if it's like 60% maintenance issues, right?
Yeah,
those
right.
issues happen, and your cash flow is gone for like the next 5 years if everything else works well. And so probably like you, when I started, like me, and it sounds like you when we started, you on rentals, you make some assumptions that are like totally BS. They very likely will not work out the way that you thought you were conservative, but you weren't even close, right?
No, I had no idea. I had no idea to plan for like, any big expenses that are coming up.
Right.
Oh, the furnace is 20 years old, but it works. So
yeah. And then you started wholesaling, and then you realized, hey, I could make more money by doing a fix and flip or something else, right? And so that's kind of the evolution of exit strategies. And like some people only rehab because they don't know how to buy, so they're just buying from wholesalers, right? And there's all these different models out there. And the beauty of our model, the way that we run it, and the way you run your business now, is we're buying direct from sellers. And that gives us the opportunity to do a number of things. You could wholesale it, you could rent it, you could fix and flip it, or you could do what we call wholetailing, and kind of a hybrid of wholesaling and rehabbing, I guess. So it pretty much makes up your business today, right? You're doing all those things, right?
Yeah, absolutely. So I don't think you can still probably get deals on the MLS if you're on it every day and, really working it hard. But we really focus on lead generation and bringing in direct to seller leads, and then we assess the lead as far as what the opportunity presents. Is it a wholesale deal? Is it a flip? Is it a rental?
Yeah.
Or can we wholesale it, just clean it up and put it back on the market?
Yep. Yeah, and I want people that are listening to understand like how to get there, like how you got there and how you evolved, because sometimes it's not clear when you're first starting. You're just like, I'm wholesaling, I don't have access to a lot of capital, and it's like, well, most people don't when they started, so you can get there, right? But what we've kind of found, I think you'd agree with, the reason you have different exit strategies is you're trying to always maximize your profit, right?
Right. Yeah, and that kind of leads in. When my first flip, it was a lady that I was going to wholesale her house and to a buyer, and she had like 60% of the work already done. Okay. So when I got there, I was like, well, why are you selling this? And she had 2 contractors run off with their money. I had like 30 grand in the bank, so I said, well, why don't we just partner on this? Which that was, in her mind, sounded like a horrible idea after 2 people.
Right.
She's like, well, why wouldn't you just buy the whole thing? And I'm like, I didn't really want to say, well, I don't have the 90,000 to buy it, but I had the rehab money. And I said, well, I could pay you more if we just, let me rehab it. And then in 90 days when we sell it, we'll split the profit. Right. So that was kind of the evolution of raising money for me and using other people's money, was because instead of me paying her 60 grand to buy the house that day. I paid her 60,000 plus we split. I renovated it and sold it, 3 months later, and then we split the profit. She ended up walking away with 85,000, and I got my 30 plus another 20.
Yeah. So talk about that a little bit. What are some of the reasons that talk about your mix a little bit first. So like what percentage of your business are you doing, and where you're, I know you're doing some decent volume up in Chicago, but how frequently roughly are you rehabbing versus wholesaling versus maybe keeping rentals or wholetailing?
Yeah. So I would say our business is probably, if I broke down the numbers, we're about 40% rehab, 40% wholesale, and then the other 20% is we're wholetailing.
Okay.
So, and then in that mix is probably on the rehab, we also will take down rentals to make sure they're stabilized. And then, that's probably mixed into that 40% of rehabs is probably 10% of that is we stabilize rental properties that have leads that come in.
Okay.
That are already tenant occupied, and then we'll sell them as cash flowing investments to other investors.
Okay. So, and you would probably agree with this too, just for people that are listening here, your exit strategies. Let's talk about like why you do some exit strategies, and then we'll kind of later get into how that might shift over time, right? Because like in a really hot market, sales market like it's been over the past couple of years, like you're probably rehabbing more now, I'm guessing, than you did in years past. And if the retail market starts to slow down, you'll probably rehab less. You just kind of shift to different strategies based on what's going on in the marketplace, right?
Yeah, absolutely. So we'll basically we're looking at when we get leads that come in. If it's one, we assess it like, is it an area that we invest in? Because sometimes there's higher crime areas that we stay out of or don't want to. My wife runs the renovation, so she has to go to the properties.
Yeah.
Yeah, so those leads if they're higher crime, we'll wholesale those because there's still a lot of opportunity for investors. There's a lot of investors that buy that product. We also we've kind of taken a step back from doing like large renovations, like 80,000 and higher. So if it's larger than that, we'd probably wholesale that if we can.
Yeah, and in the city, in Chicago, I just know because I used to live in Chicago too, but there's some like major renovation projects, some really old buildings that you could just sink a ton of money into, right? But they take a lot of time, right?
Yeah, so
and it's a lot more risky. You perceive it as risk, and you're like, I don't want to take that on.
Yeah, we have such a large. I mean, you got to think about how long Chicago is. There's a lot of homes that were 1900s and 1930s. So you're doing basements to, roofs and everything in between. You got to pull permits, plans, and wait on inspectors and that. So we try to stay away from those and wholesale those off to the guys that, really enjoy that.
Sure. Yeah. They're more of ultimately like builders, right?
Right.
Yeah.
Yeah. It takes, those are 6 to 9 month rehabs, just with permits and plans.
Yep. Awesome.
So
in terms of what makes you decide other than let's talk about that's time wise, and then like money, like how do you decide whether you're gonna, I have a general rule of thumb, but I want to hear like how you decide like we should take this on to maximize profit or not. Like how do you know if it's gonna be a wholesale deal or a rehab? Yeah.
So I think if we can make on the wholesale side, I mean, if we can make 15,000 or more on the wholesale, then and still leave it big enough spread for our end buyer that's going to rehab it. Like we would love to wholesale it, and then so that's one avenue for us to maximize it. Otherwise, if it's just you can't buy it at a big enough discount to wholesale it, and you're only going to make $3, $4, $5 grand, but we can make 20 to 25 on the rehab ourselves, then we'll go ahead and we'll rehab it ourselves.
That makes sense.
So also we look at cash flow too.
Oh yeah.
Money's always ebbs and flows, right?
So. Like, oh yeah. The reason I said, oh yeah, I'm not allowed to manage the cash in our business. We would have been out of business a long time ago. My wife handles that, but like, oh yeah, that cash flow thing. That's critical, right? So sometimes you just, you might not have capital. Like you might have a bunch of houses in inventory, or you're like, hey, we've got some bills to pay, right? So.
Yeah. So
talk about that a little bit.
Yeah. So I mean, like right now, we had an investor that he had 400,000 out with us, and it was at any point in time we'd write a check. Well, he decided to open a restaurant, and So that money went away real quick. Like I had to get it all back to him. So, now we're raising more capital with other investors in that, but it's one of those things where, it depends on your private money that you have available to you. We'll look at what, what we've spent. We obviously like to take down properties ourselves with our own cash to maximize our own returns if we can. But, in this business, it's cash intensive. So, we want to make sure we got enough capital in the bank to be liquid. So
yeah, and cover your bills too, right? I mean, we kind of, I do a lot of coaching, and one of the things I always tell people is, hey, we tell people to keep your operating funds, like covering marketing costs, paying your rent, if you have an office, admin costs, like those costs separate from your property fund. So we have an operating account, and then we have a property account. A property account, like we don't commingle, because we're borrowing money from private investors too. I don't want that money to be paying for my admin salary or, whatever, like my lunch with my wife today or whatever, I mean, try to not commingle that. But, it's important to, if you know what your monthly overhead is, like, hey, we spend 5, 10, 15, 20,000, whatever it is on advertising. And by the time you figure in salaries and stuff like that, your overhead is something, let's just call it 20,000. Like, you got to know that you got to cover that cost. You don't want to have to say, hey, I need to finish this rehab, so I can't advertise this month. Like, that's like the kiss of death in this business.
Right. Absolutely. Oh yeah. We're always looking at cash flow and expenses. So I don't know, for me, it's 6 months. I like to have at least 6 months of,
that's good.
Just sitting off to the side, so we know we're good.
Right. And that's a good metric. We early on, we were kind of looking at like 3 months, but of course, the more, the better. Right. But I want people that are listening to that to really kind of understand what we just said. Like, you're going to be hesitant to hire people or grow your business or commit to advertising consistently if you have inconsistent cash flows. And so it's kind of nice to have this bank of money, like you said, 6 months. So if your overhead is 20,000 a month, you're saying you need to have 120,000 in the bank or more in terms of covering your operating costs. And if that starts to whittle away, you may have to pull back on advertising, or may have to fire somebody, or you can't pay them, or those things, which none of those things you want to do, right? So you've got some cushion there to say, hey, I can bridge the gap as long as effectively my operating account has that cushion in there, then we're good. And if, by the way, it starts to come down a little bit, and you have a deal coming up, you're like, hey, we need to wholesale that and ring the register so we can kind of get ththose reserves built back up, right?
Oh yeah, absolutely. And I think that there's people listening too. I mean, it takes, I didn't start with money, so it takes time to build up to that. But I think you can make good. A lot of mistakes I see new people make, or investors, is they pull back on their marketing if something doesn't work within 1 or 2 months, and you don't see the results from it. Which sometimes it takes 3-4 months for the sellers to come around. Now you pull back because cash flow is tight. You're unsure, and then now you're missing out on new leads coming in, and it's a constant chasing yourself. So if you have the capital to sustain the ups and downs, then you can make good, wise decisions and feel good about pushing forward. So
right. And one of the things that we mentioned a little bit, I want to dig into a little bit deeper, is how your mix might shift with the market, right? So if or your inventory situation, like if you saw your inventory is building up, like, right now we're holding, if you said, last month we were holding 5 houses and now it's 8, and, we're on our way to 10 here or whatever, and things are slowing down, then you tend to wholesale more, right? Because you're less likely to build up your inventory if it looks like you're having a harder time selling houses, right?
Yeah. So last August, I mean, it got kind of sleepy, I think, across the country, but it definitely did in Chicago. So, I mean, we were looking at the price points that we're in and saying, hey, let's wholesale, instead of holding this and see what's going to happen. Let's go ahead and wholesale them. And then as, things have picked back up again, and we're not holding, we're not sitting on as many properties. And so it's like, let's just, we can buy more, and take those down and feel good about it, that we know that we can, that we're going to be able to sell them.
Right. Yeah. I think it's when the Fed announced last fall, they raised rates a couple of times, right? And a lot of people got a little worried, the retail market slowed down. I mean, we saw, even in Texas, which is on fire, we saw it here too, things just started to slow down, and we're like, what the heck's going on? Because it was moving so fast. And certainly November, December last year, it was just almost like a screeching halt. Houses that we bought, and the average days on market were 3, 4, 5 days. They were just opening weekend, you're selling your house, and next thing you know, we're sitting on it for 90 days, and we're like, what the heck is going on right now? Like, you know, so.
Yeah, and I think the other thing in Chicago too, for us, you know, our property taxes in Illinois are really, really high. So with the $10,000, they capped it, and believe it or not, that's, you know, houses over 300-400 grand have property taxes of 10,000. So I think with that combined with like the new tax laws, people are kind of unsure in that 400,000, like what their tax situation was going to look like. So those middle price point homes, you know, it was sleepy there. So, but I think that's all changed. Everyone kind of knows what it's going to look like now, and rates looks like they're stabilized for a while. So
yeah. And things have. I mean, you know, there's like the political environment is crazy, but people have started to accept crazy, right? And then, of course, when the next election comes around, people they'll feel good or bad about it one way or another, you know. Right. And so that'll impact the market one way or another, but we'll worry about that when we get there, right?
Exactly. So we're buying. I mean, I think right now we're trying to buy. We're buying as much as we can, but I think there's a lot of investors out there that are feeling good about where the market is. So they're, you know, we just kind of obtain, you know, depends on how many rehabs we have going too. Right. Contractors, you know, I don't know in Dallas if you guys have seen, the contract pricing has gone up.
Yeah, so. No doubt. Yeah. It's interesting when you think of like all the ways that you might make a decision to rehab, for example, which is the kind of like your biggest, your kind of your most risky, I guess. You're like doubling down on it. Like if you could wholesale it and you choose to rehab it, like you're taking on some extra risk, you know. But it's like, do you have the cash flow for it? Like, do you have the capital to close on the deal, right? That you can get from hard money or private lenders or whatever.
Right.
Do you need faster cash flow? And if so, then you probably wouldn't rehab. Like, do you have enough capacity to manage contractors? Like, I know Wendy, your wife, does all the manages the contractors, and then do your contractors have capacity, right? Or like you gave them another job and they're like, hey man, normally this takes me 5 weeks, but this one's going to be like 10 because they're backed up on jobs, right? And so you got to think about all those things, right?
Yeah, there's a lot of things that go into it. Absolutely.
Yep. Cool. So talk a little bit about you're doing more rehabbing stuff now than you did in years past because the market will bear it, but also because you have started to raise private money and you've started to find sources of capital that would enable you to do that, right? So talk a little bit about that evolution for you, and maybe in a way that people that are listening can see the vision for themselves to raise money as well.
Yeah, I think, you know, if you can raising capital, it's kind of scary, obviously, for new people and like, you know, our friends and who's going to give you money. But what's been successful for us is really just being excited about what we're doing and sharing our story and how we're, you know, just recently, and I think we talked about it before the show, you said, hey, you've been more, seen you a lot on Facebook lately, right? But I've just been sharing like houses I've been in that we bought and saying, hey, this is a seller that we helped out of a situation so they can move on with their lives. We bought it and we actually used, our investor works a full-time job that has money in their 401k or savings account, not really earning much. They actually funded the deal for us, and then when we sold it, they got paid back their capital plus the return on their money, and we did all the work, right? So just in showing the homes and being excited about what we're doing, and just in 2 weeks, I think I raised probably close to $150,000. I had a college buddy who said, hey, I got 25 grand, and I'd love to get, if we can put it into a deal. And then my roommate from college, he hit me up and said, hey, my dad and I were just in Hawaii, and my dad's retired now, and he's wanting to do real estate. Maybe you could help him out. And so now that's going to be like probably another, 100 to 125 right away.
Yep.
Just by me telling my story of being excited about our business. So that's how it's kind of started early on too. I mean, just you're at dinner, friends and family or whoever, it's like, hey, this is the deal we just bought and the return that we got, and being excited about, sharing and, asking people like, hey, do you know anybody that would be excited about making, 10-12% on their money?
Sure.
And
sure, yeah.
When you start sharing those deals, all of a sudden people are like, well, I don't know anybody, but I would be, right? Because they want to be excited about it. So
the pros, the folks that teach how to raise money typically say to use that angle, right? Instead of saying, hey, would you be interested? It's like, do you happen to know anybody? I know you're well connected. Do you know anybody? And people are like, they might self-select, right? Well, I'm interested.
Yeah.
Or they might not. They might know other people, right? But
Yep.
it's a little less direct. Yeah. So what do you do, if I can ask? Because I think a lot of people will say, man, all my friends and family are broke. Like, I don't know anyway, which for a lot of people is true, because a lot of people are broke, right? But you said you had a friend that had like 25,000, and so people would be like, what do you do if they have a smaller amount that, like, if you, let's just say your average loan, just to keep the numbers round, like you needed $100,000 for an investment, but you know some people that have like 10 or 20 or 30,000, like a piece of that. How do you structure that deal? By the way, for those listening right now, neither one of us, we're both very handsome, intelligent people. Neither one of us are attorneys, so don't take legal advice from us. But
yeah,
how do you kind of structure those situations?
Yeah, that's a great question. So like in that situation for 25,000, what we would do is either early on, if I don't have any of my own capital, I mean, I might find a hard money lender in my area. They would maybe put up 75,000, and let's say we need 25,000 to bridge the gap, or
Yep.
for the rest of the renovation, and maybe they want 10% down. So that 25,000 that we take in, we would put it on a note to our company. So whatever your LLC is, we would just take it in as a company loan.
Yeah.
That's what my attorney and CPA would advise me to do.
Yeah. So it's kind of unsecured loan against, I guess, you or your company, but
you or a company, correct. So, and we explain that to them up front, saying, hey, if it's with a small dollar amount, you're probably going to have to come in behind somebody, or behind the money that's going to be in first position.
Right.
So you're not going to be able to get a mortgage. So basically, you're just what they call gap funding.
Right.
The remainder of the loan. So
cool.
And we explain to them the risk. So this is awesome. You can make 10, 12%, but here's what happens if we default, and what you'd have to do. I think, I always find it interesting. Like some people never ask those questions, and it's like,
yeah,
you need to know like what your risk is.
Right. Yeah.
So,
But you want to, for people that are listening to this and thinking about raising money, like, you should always protect your lenders. Like, even if it means you got to come out of pocket somehow, like you should never, just say, well, it didn't work out. Sorry, man. We lost your money. But I mean, I would never allow that to happen. Like I literally would, my son wouldn't go to college or something if I had to do that,
Exactly.
But I mean, you should never get yourself, it's easy. I mean, it's easy to see how people could, be a little more sloppy when it's not their money, but your first interest should always be protecting your lenders, and your second interest is your own success with that deal, right?
Correct.
Yeah.
You got to I would never let my lenders.
That'll be the end of your being able to lend from anybody, because the word spreads fast on things like that. So
right.
Yep.
So otherwise,
good.
I mean, if they have all the capital, then they come in as a first mortgage position, and lend on the whole project. So
yeah, awesome. Blake, hey, I didn't mention this up front, but if I could catch you off guard a little bit. You're a member of our Investor Fuel Mastermind, you and your wife, Wendy. And, what are your thoughts on the mastermind? You just kind of tell people a little bit about it and help spread the word. I mean, we found that when people come in and, we've got some really good people in our group, as you know, and you're the best one, by the way.
Thanks.
I'm gonna edit this out. No, I'm not. But if you could just kind of share some thoughts on the group, because a lot of people see what we're doing, but they don't necessarily know what it is. And I'm biased when I say things, and so you could pretty much validate right now that I didn't even tell you that I was going to ask that question. But perhaps you could just share your thoughts on Investor Fuel.
Yeah, I think as entrepreneurs and business owners, it's funny. We find it sounds so cool to own your own business and go do your own thing, but as you leave corporate world or any job, you find yourself kind of on an island. And I think some of the most important things are being surrounded with. They say if you want to hang out with your 5 wealthiest friends, or if you want to you're the average of the 5 people you hang out with, right? So I was looking probably about a year and a half ago, 2 years ago, and kind of when you first rolled this out, and obviously I've been on your show and known you've done a lot of great things, but I joined in February, I think, of 18. So, and was kind of looking for that place to just be surrounded by good people that were doing great things. And you guys have put together an amazing group of investors around the country. And it's been very instrumental in our business, because I use it for like what I call 90-day sprints. So we always talk about 90-day goals, and that's kind of like our benchmark. from meeting to meeting to see how our business is doing. But I think the relationships that we get from it have been awesome. Tools, for like lead generation to, done deals now with a few of the investors, the other members of the group. Just the camaraderie of guys that'll, accountability calls that you guys have. And I apologize I wasn't on the last one, but like yesterday I was on the phone with Ted, like we were talking, he had a challenge on one of his properties he's going through. And so like, we both have helped each other out over the last year, like helping each other stay accountable and just staying in tune with our business.
Yeah.
So.
Would you say, I think probably most people like you and I knew each other a little bit because you've been on the show and we talked a couple times. And there was that probably early element of trust. I want to see what this Mike guy's doing, right? And I'm the ringleader there, but I think the real magic is in the group itself, right? I mean, would you say that you probably like how coming there, like you probably didn't really know what to expect by being a part of that community before you actually came and started to be a part of it, right?
Yeah, I mean, I kind of expected, most people would be like fairly good people you'd want to hang out with, but I figured there'd be like a handful of bumping their chests and I'm so awesome. And there's like no arrogance in the room. And I mean that from the bottom of my heart. It's like everyone's there to give. And you and Stenson, you guys just kind of facilitate everyone just coming together. But I think that's been one of the coolest things is there's been a lot of great friendships that have been created from that, from that room. And like what I'd say, true friends.
Yeah. Yeah, no doubt. It's kind of funny because, I'll say this, I don't always admit this or like to admit this socially, but I'm extremely well connected in the industry. I know a lot of people, but I would say I have a lot of acquaintances, but I don't have a lot of great friends, right? I mean, it's just everybody's busy, and it's not like I wouldn't do things for people or they wouldn't do things for me, but it's just like, some people have that like best friend that they're just like talk all the time. And like, it's hard to find that in the industry unless you're part of a group like this, right? Where you can break bread with people. And, we all went skiing, right, together here a couple months back, and just doing different things together. It really kind of forges these friendships that a lot of us crave that are hard to get in everyday life because we're crazy entrepreneurs, right?
Right. Yeah, absolutely. I think the lifestyle, right? So it's like everyone's, it's fun to get together and do some cool trips together and just share on things outside the box. So
Yep. Cool. And if you're a member, then you get to come up to Chicago and hop on Blake's boat.
Yeah, absolutely.
On the lake. Yeah. Cool, man. Well, hey, thanks for sharing that, Blake. I appreciate it. So for those that have been listening and, want to learn more, I know you're looking for potential lenders in the Chicago market and probably always looking for ways to do deals with other people and things like that. How could folks get a hold of you?
Yeah, they can, am I supposed to get my cell phone on here, Mike? That's cool.
You don't have to do that. You just connect you on Facebook or something if you want to. I know you don't even really have anything for sale, so.
No, but they can reach me on my email address, blake@expresspropertysolutions.com. And blake@expresspropertysolutions.com. So yeah, I'd love to. I mean, I know you said raise money, and I'm always looking to do that. But honestly, if there's any way I could just help out,
that's awesome.
Move forward with their business, I'd be happy to do that.
That's great. And if it's okay, we'll add a link to your Facebook account.
Okay.
And then the show notes here for those that are driving right now or something and want to come back to it. So awesome, man. Well, hey, thanks so much for joining me on the show again.
Mike, thanks for having me on. It's been great.
Good to see you. Of course, we're going to see you at Investor Fuel here in just about 2.5 weeks, and looking forward to that.
You bet.
We're having our casino night. We're having a casino charity money raising event. By the way, by the time the show comes out, this will actually just be pretty quick after our recording here. So if anybody, I don't have the link. I'll put it down in the show notes for the casino night. But we're doing this is the first time I've kind of mentioned this, I guess, publicly, other than a couple of little posts on Facebook. But we're having this charity casino event where we're like bringing in, we have a company bringing in blackjack tables and roulette tables, craps tables, and stuff like that, and trying to help folks in the industry raise money for some great causes. So it's going to be a fun thing that we haven't done before. So it'll be a good time.
I'm looking forward to it.
Yeah, cool. Well, everybody, hey, this is episode number 469. If you haven't yet subscribed to Flipper, this is like 5.5 years in. So if you haven't, where you been? But better late than never. We'd love it if you go out and subscribe on iTunes, Stitcher Radio, YouTube, Google Play, wherever you watch or listen to us at. Of course, you can watch and listen to all of our shows, 5.5 years worth of shows on flipnerd.com. So appreciate you. Until the next episode, keep on fighting for freedom. We'll see you then. Thanks for listening to today's show. There are 3 ways I can help you start or grow your real estate investing business. If you're a new investor and just getting started, the Flip Nerd Investor Coaching Program is the most effective program in America. I've been coaching and mentoring new real estate investors for 10 years, and my students have literally purchased thousands and thousands of properties. Many of them started with little to no experience at all. Our program is a paint-by-numbers program where we tell you exactly what to do week by week to make sure that you don't get distracted on your way to results. We show you how to build a real business, not just create another job for yourself. New memberships are limited. You can learn more and apply or schedule a call with me and my team at flipnerd.com/coaching. If you're an experienced investor doing a minimum of 10 deals a year, up to 500 deals a year or more, or have a multi-million-dollar real estate portfolio already, you should check out our powerful Investor Fuel Real Estate Investor Mastermind. Over 100 of the nation's leading real estate investors are members, and it's not uncommon for our members to 2 to 5x their business just from getting around other members at Investor Fuel. At Investor Fuel, each of us are business advisors to one another's businesses, but we don't stop at business. We focus heavily on becoming better people and living fuller lives. If you're looking for fuel for your business or fuel for your life, please check out investorfuel.com. Applications and interviews are required, as most investors are not a fit for our community. Please learn more at investorfuel.com. If you're not ready for coaching or masterminds but eager to start learning more about investing, please join our private Facebook group by visiting flipnerd.com/Facebook. New members get access to free training from us right here at flipnerd.com, and it's a community to safely ask your questions, a great place to get started. Simply go to flipnerd.com/Facebook to request your access today.